Hi, good evening. Can everyone see me? Great. I can see that people can see me. Okay. Hi, good evening. Hope you're all doing good. Thank you for joining in on a weekday. I will try and come every week so that I can answer a few of your questions or all of your questions live here and now, right? So I will also try and bring in many topics as much as possible around investing that should help us to, help you to, uh, clarify a few of your doubts, understand more about investing, what kind of portfolios that you should build, how to build portfolios, and so on and so forth. So please feel free to ask me any kind of question that you may have to understand the market, to understand investing in detail. So today I wanted to bring in a key and an important topic, which is Indian market overvalued? What should be the strategy for the year 2024? How should you be approaching markets? I will start off with some sort of presentation that I've built for you so that you can get a gist of, or at least give some context to this entire AMA session. But please feel free to ask me any kind of questions as and when we progress. And I thought, anything in India works around incentives, right? So if you are someone who is keen and active, but then a little shy of asking questions, I'm going to give each and every one of you a special kind of a gift at the end of the session. So please stay with me till the end of the session. And one rule is please keep asking me questions as much as possible, right? So if you can see me, I'm ready to go live. If you can see me, just give me a thumbs up. Share this videos, share the link with your friends. So if you can see me, I just need a thumbs up or a like button or a heart button, whatever you feel appropriate. Okay, I can see a couple of thumbs up button. Let me start by stating few things that I've built for you, right? So if you could actually see here, what I want to say is one of the reasons why Nifty should touch 25,000 purely on the basis of earnings is because we are seeing substantial earnings growth for the past few years. This information that I'm going to share in the next few slides are basis the report that ICICI Direct team had published recently. So I've taken few important slides and I've started using that in the beginning of the presentation. So if you could see here, earnings growth has significantly accelerated, and we can see that while sales growth is just about 8%, 20%, 7% in the recent quarters rather, the profit growth has been significantly gone up. It has been at 36% in Q1 FY24 and at 31% in Q2 FY24. This is the reason why we believe Nifty will go up in the next few quarters also. Any questions till now around Nifty earnings? Any questions? I'll just pause for maybe 20 seconds. Also, people, where are you joining from? I mean, which part of India, which part of the world are you joining from? I just wanted to make it a little more interactive. So kindly let me know any of your questions. Which country are you from? Which part of India are you from? And also ask me questions around this first slide that I'm presenting. Okay, someone has said no, while I don't know what no means. Are you able to see my questions? Sorry, are you able to see the slides? Okay, start asking questions so that we will I will be able to answer those. So please feel free to ask questions in the comment section, right? Now, in just we are seeing significant amount of earnings growth in the recent years, right? And that's one of the reasons why we believe Nifty will touch 25,000 purely basis this simple calculation. So let us look back at some bit of past history. Between fiscal financial year 2017 till 2020, the earnings growth was just 2% CAGR, which means a lot of banks, a lot of commodity oriented companies were not doing as well due to legacy issues, due to global issues. They were not doing very well. And the EPS, which is earnings per share of Nifty companies, was just growing at 2%. So if you have not made any return between 17 and FY17 and FY20, it's primarily because the companies that you've invested in via mutual funds, via Nifty, via individual stock picks haven't grown at all in their earnings. So if there's no earnings growth, how will you expect, or why should you expect Nifty giving you positive returns or so? And in FY20, just before the end of FY20, COVID hit, and that again added up to a bit of earnings contraction. But post COVID, there has been a significant demand or rise in commodity prices, and also a lot of banks kept and came very, very keen. Okay, and that's the reason why you see in this chart between FY20 and FY23, the EPS has grown by 22%. Guys, market is a slave of earnings. Okay, the more the earnings, the more the market will grow. The less the earnings, the less market will grow. Simple. And that's the reason why between FY20 and 23, you have seen Nifty going up, because the earnings per share grew up by 22%. Now, between FY23 and 25, as per estimates, the CAGR of Nifty is expected to grow by 16.3%, which is very, very healthy. And we expect, I mean, at least ICICI Direct team and Bloomberg expects that at the end of FY26, the Nifty company earnings will be 1250 per share. Okay. Please, guys, please keep asking me questions. I'm just trying to put some context to this AMA so that you also have a nice learning at the end of the session. Please keep asking me questions, anything about investments. Okay. Rajat, I'm going to answer that question. I have built specifically sector oriented a couple of slides around sectors. I'll answer that question, Rajat. So from fiscal year 2021, where the Nifty earnings were at about 515 per share, we are expected to go to about 1250 per share, which means what is the calculation of a target of Nifty? Earnings per share into price earning multiple. In general, you can give a price earning multiple of 18 to 20 for Nifty. That's been the past. So if you earn 1250 per share and you give a 20 PE for Nifty earnings, you will get a target of 25,000, and that you should be able to achieve at or by 2024 December. Okay. This means even if you invest today at these levels, you should be able to make about 15.4% return, which is significant for the market of India's size. Right? Did you get to the calculation? Any questions around the calculations? Thanks. Someone has asked me questions about Fed rate. Wonderful. Okay, now I can see. Sanjay, thanks for the question. Pradeepa, welcome. Thanks for coming in for my every presentation. Thank you. Okay, I'll answer that question, Yukendra. Just stay put for some more time. So I hope I answered the question about Nifty's target. Doesn't mean that we will not have negative returns. If you see in the past, Nifty has fallen by about 12% on an average. Even last year, it fell by 10% before it went up, right? Same applies for small cap, which on an average falls by about 20 odd percent. And for mid cap, on an average, it can fall about 17 odd percent or so. Yes, last year was an exception. Don't make your assumption for the future returns basis last year. Last year was an exception. Okay. Now, on the sectors that we are positive about, Rajat, one of the sectors that we believe is very, very good is auto. The second sector where a lot of things are falling in place is bank. Third is pharma. Let me show you a couple of slides about maybe auto and about bank before I get into the proper AMA, right? Hope that is fine with everyone, right? It's all fine with everyone. And guys, please stay put. Ask me a lot of questions, so that at the end of the day, end of the session, I will be able to give you a bit of a freebie for you asking me those questions. Okay. Let me see if I can quickly bring up the image on yeah, just quickly bringing it up, just about one image. Okay, I hope you're all able to see the slide which talks about, which is clearly about banks. Okay, and let me just see. Cool. Okay, as you can see, this is again prepared by ICICI Direct. This is the research that is done by ICICI Direct, and if you can see the outflows, which is advances, which is nothing but loan outflow for banks, have been slow between 2015 till 2019 at the rate of about 9.8%. So the advance rate was growing only by about 10% or so. But post COVID, the advance rate has gone up by 15.3%, which means there is more loan outflow. It's a different fact that this time around, more corporates, less corporates are coming in, more personal loans are going in. But yes, there has been a decent growth in advances. Now, in terms of NPA, this is the most important when it comes to banking as a sector. While NPA shot up because of provisioning, because of disclosures, because of bank cleanup from 1.2% to 2.7%, which is very bad for a bank. But if you see, the same 2.7% is at 1.1% as we speak today, which means the bad loan ratio has significantly dropped. We are talking about close to the lowest that we have seen in the last 10 years, which is an excellent news. And the third, which is something that is used to calculate for banks, is return on assets, which is more about asset turnovers, right? If you see, has been sorry, not asset turnover. It's if you invest 100 rupees in a bank, how much are you getting back? It is a decent 1% at this point in time. Great advances, which is loan growth rate, good and low provision for NPAs, and close to 1% return on asset. All these three things are falling in place, which means banks are at the cusp of growing very, very big in the next few years. And today they are, or maybe slightly undervalued or quite undervalued, and can give you significant return, beating Nifty in the next couple of years, right? That's what I can say about bank as a sector. One more sector which we really like, where I thought I should share a bit more about it before I get into this AMA session, is let me see if I can pull that, is auto. Again, these are all excellent research done by ICICI Direct and Bloomberg. If you see, there is increasingly premiumization of auto as a sector. A lot of people are buying higher amount of SUVs. If you see, we are already beating FY 2018 numbers, and today about we are close to, close to about 62. Share of SUVs at about 62, which is premiumization. Commercial vehicles are already beating the sales that they have seen in the past, primarily because of GST and better tolls and better roads and stuff like that. Tractor sales is also surpassed and it is almost near the all-time highs that we have seen. The only place that we are continuing to face problems is two-wheeler, which is still below COVID, and maybe there also, if there's premiumization, that trend will also come into picture. So these are the two sectors which we are really positive about, and pharma is something that we are also positive about, which I will take in the next session or so. Please, now I'm opening the floor for you to ask me any questions around investments and investing. Thank you for being so patient and listening to this. Okay, so I'm ready for the sessions. Let me see if there are questions that have come from you. Why is it 1250 and not 1100? Great question, Kiran. I thought somebody will ask me that question because 1100 is FY25 earnings, but by December this year, you will not look at FY25 earnings. You will be looking at FY26 earnings because FY25 for December 24 will be very, very close by. So, like for example, if you were to calculate Nifty target now, we are not going to look at FY24 earnings. We'll be looking at FY25 earnings. But as you get closer to December, you'll be looking at FY25 earnings. Great question. Thank you so much for asking me that question, Kiran. A big thumbs up to that. Now, what about EV sector growth in 2024? EV sector is in for long term. I just think if you pay the right price and stay with it for a long period of time, you will make a decent set of money on EV as a sector. May not be significantly different from what we saw last year. There needs to be a lot more improvement on the infrastructure, and if that happens, I think this sector is for long term. Look for companies which have great clean management, which have the vision to take care of the new things that are coming in. Because EV will evolve very fast, so you need to have a good R&D team. And if everything else is falling in place, you should stay with EV for a long period of time. Great question, Salim. Okay, Bangalore. I am also from Bangalore. Great. Thank you, Pradeepa, from joining in from Bangalore. Okay, sectors I've covered, Rajat. Thank you for asking me that question. I saw one unique question coming in. So sorry, I'm still yet to figure out how to see all the questions at one single place. Someone said Hyderabad. Okay. One of the person asked me saying, "Hi, Anand, the US Fed rate is currently at 5.5%. Okay, and the Fed is it at 5.5%? I'll have to check. And the Fed is expected to cut interest rates in the coming 11 months. Okay, that is expected. Yes. And usually when this happens, there is a decline in S&P by 10 to 20%. Can you also let us know impact of this in Nifty 50? A great question, but what I believe is lower interest rates are always good for Indian economy globally, primarily because you borrow at lower rates and then you will invest in better economies, better performing economies, especially in the developing market. So I think any rate cut is good for India, and that's one of the reasons why Indian market shot up in the recent between November and December, other than the election results. So if that were to happen, and if globally every Fed or every central bank starts cutting rate, it is great news for any developing markets and especially for India. And I also believe this year is a year where a lot of money will flow in, not from DIs, which is us, but from FPIs, because there'll be so much money available. They cannot avoid India, but only invest in India because it's a very, very promising market. So let's be prepared for a gush of money that will flow into Indian markets. While domestic inflow continues to be strong, Richard, at current valuation, how attractive is India as an investment destination for FIs currently? Richard, that's a good question. I would, let's say, forget for FIs for India, whether it is for FIs or DIIs. I think Indian equity market, even at these levels, are continuously attractive, primarily because there is earnings growth, as I pointed out in my initial slide. I would try and avoid expensive assets like small caps. I'll try and avoid as much as possible a bit of mid caps, but I'm going to go big on large cap. At these levels also, I think it continues to be attractive both for FIs, for DIIs. And surprisingly, I was doing a session last week and I saw that Brazil as a country has done a lot better than India. Europe in spite of all these recession oriented news, especially German and few other countries have done better than India. So relatively we are okay. Another thing which will help you, Richard, is between the 2021 highs and 23 highs, Nifty has gone up only by 17%, which is in 2 years, it has only made 17% return. While yes, last year makes it a little expensive, it is not really very, very expensive that we should exit out of that asset, lock, stock, and barrel. So I'm avoiding small caps for sure, but I am going to go big on Nifty and large cap as an sub asset class. So I hope I answered that question. Let me see if there are. Let me see. Because let me see if there are questions here. Yeah, it'll be a lot easier for me. So Mohit, but what's your view on mid and large cap? Already they are overvalued in there. Is there more scope for investment? I already answered that, Mohit. I don't think, I definitely think small cap is overvalued, but I still think mid cap is decently valued. May not be not the best of the asset to invest in. Large cap, definitely, I'm very, very convinced that it has got a bit more room to grow from here. Thanks for asking me that question, Mohit. Many of the many of them influencers market correct 20%. How we need to split our investment, equity and bonds? Hari, which is a very good asset allocation question, Hari Prasad. Thanks for asking. See, the thing is, market can correct anytime, and I already showed you that on an average it corrects 10%. Okay, but then if you're going to wait for market correction, you will never be able to invest, because the day it falls 5%, you'll think, your mind will think, or a lot of influencers will come and say, who don't have a clue about market, they will come and say it'll correct another 5%. Let's assume that they get it right, because the market is market, it can go anywhere it wants to. Let's say it corrects another 5%. At that point in time, they will come and say, or you may start feeling that, oh, this is bad market, it can correct another 15% or so. Yes, it can correct, but if you wait, let's say it corrects 12%, it turns around, you will never be able to enter. So the good idea there, instead of waiting for market correction, is invest, and invest slowly, regularly. At this point in time, because of overvaluation, invest slowly, regularly. And if you have new money flowing in the form of SIPs, you're investing more and more money of yours in the form of bonuses that are coming in the form of salary that is coming in, don't worry about corrections. Yes, today you bought it higher, tomorrow it may correct 10%, but then you have new money flowing in which will buy it at 10% lower, right? Then why do you have to worry? So till the time there is new money flowing into the market, be happy if there is a correction. Think counterintuitively, right? When there is a sale, you are happy because you are ready to pay for that asset 100 rupees, and today it is available at 65 rupees. You are going all the way to Zara and Louis Philippe and everywhere to buy clothes when there is a sale. When there is sale in equity markets, why are you not happy? Yes, I know you have invested, that will come down, but boss, you don't need the money today. Why do you have to worry about the valuations today? Keep buying. Indian markets are going to grow. It will fall. It can fall 5%. It can go 15%. In COVID, it fell 30%. But till the time your money keeps flowing in and you don't need the money for the next 2, 3 years, 4 years, keep investing your money and keep your money invested. Don't wait for corrections, because there's a famous saying, a lot of people have lost money waiting for the correction than being in the correction itself. I hope I answered that question. Okay, Bijul, say on small cap, investors having 30% XIRR should start STDP to large cap or balance fund or other recommendation. Bijul, what I'm doing is I'm not investing lock, stock and barrel from small caps. I'm definitely doing STP from small cap and investing that money into large caps. I'm not investing every set of money one shot. I'm going to do that over a period of time. Yes, STP is a better method than exiting small cap all at one shot. For sure. That's a good question. But I'm not going into balance fund. I'm still getting into large cap funds. Thanks for asking me that question, Bijul. Vinay Prasad, large, mid, or small cap to invest from a risk reward perspective for 2024. In terms of ranking, large cap. In terms of, I don't think mid cap, I will invest more. I will keep my asset there. I may not really invest more. Small cap, I'm exiting. So it's clearly large cap, which is looking favorable at this point in time. Yes, if small cap corrects or if there is some big earnings growth in small cap in this quarter result, I may change the view. But at this point in time, looks like large cap I'll add more. Mid caps I may not add, but not exit. Small cap I'm exiting. So Richard, I've answered that question. Um, we might witness recession again, and it will impact the market. Salim, people have been saying recession, it is coming, it's coming. I don't know if it has already come. If it has come last year, then I'm surprised. You yourself can answer that question. What was the market return last year? Forget India. Chalo, theek hai, India mein there was no recession. But Europe, US, everywhere you see. In fact, Europe beat India last year in spite of the fact that there was a recession expected. So don't, I mean, see, the thing is, it's very difficult to predict an economy of this size. Yes, recession or slowdown can happen, it can impact, but keep your ears on the ground to see if it is really happening. Don't go by media guys who will come and say, oh, yeah, recession, this will happen, that will happen. Market would have already corrected. So if you feel that the price is correct, whether there is a recession or no recession, if you feel the investment is worthy at that current price, for example, if you think Nifty is worth to invest at 21,000 or 20,500 or 21,500, go ahead and invest. Never try to time the market basis events that you expect. I hope I answered that. Direct investment with automakers or with ancillary manufacturers. While Sanjay, I would like to answer it. I don't do a lot of stock analysis. I'm more of an asset allocator. I go into funds because investing in stock is an art in itself. I would rather leave it to a fund manager to do it. I don't do it. So I will go and invest in, let's say, ICICI Prudential Auto Index Fund or some auto manufacturing fund. I don't generally pick stocks. So I would not be able to answer that question, unfortunately. Okay. Now, what is the next question? Okay. Can I have the next set of questions, please? IT sector earnings will have impact on Nifty earnings. Hari, yes. I also thought somebody else has asked questions around IT sector. I think, I told this before also. See, there was expectation of recession in the US. There was also expectation of recession in Europe. If you see, IT had already corrected because of that. Okay. So market is very, very smart. It discounts all the good and bad news well ahead of time. What happened last year? IT actually beat Nifty. IT index beat Nifty returns primarily because it was so low that it could only go up. So I think at this point in time, it is fairly valued. There may be some, I don't think IT sector will show negative earnings. I don't see that having any further impact. Whatever had to happen, whatever projection had to happen, has already happened. It may show decent growth, may not show stupendous growth, but I don't see it pulling down Nifty earnings. It may actually impact on the positive side to all our surprises because there's no recession. If there's no recession, then why should an IT guy show lower growth? And if there is a low growth that IT guy is showing, maybe few companies will show, it is purely because of their mismanagement. One of the largest IT companies has got 22 senior VPs exiting their company. It is not good news, right? Those kind of companies you can avoid and invest with decent companies. And I think IT earnings may surprise us on the positive side. Okay, investing in equity mutual fund depends on various factors, including your risk tolerance, investment goals, and the current market price. Election can introduce uncertainty into the market. Yes, Srinivas, election will always be uncertain. You will never know the results. While 90% may think that the current government may continue, I also thought so in 2004, and everybody's surprised there was a different result altogether. So there's a 10% chance that something will sweep you off the feet. You wouldn't have expected that result. So please plan accordingly. Don't keep too much money invested if there is too much of an overvalue, because the same 90% with an expectation that 90% of the people will have, which is current government will continue, the market would have already rallied before May. What I'm going to do, I'm going to pull some money off the table by before the election results for sure. Even if I'm 100% sure that current government will continue, which is positive for the market in general, I will not keep all my money. I will keep something called dry powder. I have a logic to it. I'll talk to you about it maybe some other time. But net, I will not have 100% investment before election results, come what may. Okay. Which is the biggest theme for 2024? Consumption. I think consumption story is a little overvalued, overplayed at this point in time, Abhinav. Rural recovery is a good play, Abhinav. Infrastructure and export. I think you have beautifully pointed out three sectors. Export, so two sectors rather. Rural recovery and infrastructure look strong. Export looks weak. While we may not have recession, we may have slow growth in Europe and UK and US. So I'm not really keen on export at this point in time. Infrastructure looks good. Rural recovery looks good. Consumption looks a little slow at this point in time. When I mean slow, I'm not saying consumption is not going to happen. We are going to spend a lot on consumption, but we have already factored in the price already reflects that there is going to be significant growth in consumption. So two themes which I like what you pointed out, Abhinav. One is rural recovery and second is infrastructure. Is it a good time to invest in SGB at secondary market, Purushottam? I'm not a big fan of gold, but if you think you want to buy gold for the next few years, yes, you can buy SGBs. The issue is the price discovery in the secondary market for SGB because of liquidity is pretty poor. So I would like to go in for primary market, but if you really want to invest, check the price. If it correctly reflects, yes, go ahead and buy SGB at the current market price or so. Vishwas, what's your view on banks? I'm extremely positive, but little selective on banks. Look at their advances. I showed a slide which showed advances, which showed NPAs, which showed return on assets. Look for all these in a good set of banks. And if you're someone who cannot do that analysis, leave it to a fund manager. But please be there in banks in some form or the other. Don't miss out on the next set of banking rally that is expected to come. What's your view on healthcare, Mohit? Since it is undervalued and may provide better returns? Yes, Mohit. I think healthcare sector is going to be healthcare, pharma is a sector that we are also positive about. We think it's decently valued, not undervalued. Of all, one sector that is undervalued is banking, but it is decently valued. Pharma can push Nifty up. Banks will definitely push Nifty up, and auto should push Nifty up, right? If you would like, okay, Pragnesh, you can provide more details on the factors or strategies you believe will contribute to this milestone. Pragnesh, I think one of the key factors that will contribute to 25,000 for Nifty is earnings. Just keep a close eye on earnings. If every company that is going to come out with their results in this quarter and the next quarter is going to show you earnings growth and growth and growth, we are all set to see 25,000 even before December. Right? That's a key factor. Second big factor is going to be gush of FII inflow. I don't know whether they'll come before elections, but with the elections results more or less 90% sure, I think there will be a gush of money coming in FIIs for sure. Third, which you can look for is, are these corporates, big houses, starting to do or show capex? If you see this, then I think you can invest in Nifty fearlessly. Okay, and we may achieve that 25,000 milestone much before. What would you? Salim has asked me an interesting question. What would you advise retail investors not to withdraw the amount from SIP? They make absolutely not add more SIPs. We have already crossed a calendar year. I'm sure we are all due for our salary hikes and bonuses, if I may call it, right? Go increase your SIP. India is not a short-term story. India is an extremely long-term story, maybe a decadal story. This is some rally that we all shouldn't miss. I'm 42. I think I will of course see one more big rally, but this is one of the crucial rallies that I'm going to see. Don't miss out on the next set of 5-6 years of rally that we are going to significantly see. Yes, there will be volatility. Market will shoot up, will come down, shoot up, come down. All that is going to be part of it. SIP, do not stop. In fact, go increase it by 10%, 15%, 25%, 30%, as much as possible. India is the story to be, right? Pranay, if he bullish for the market, can we proceed with PMS rather than mutual funds? Not a big fan of PMS. Too much of taxation, and why will I give it 50 lakhs? And yeah, I'm sure there are a few PMS that are doing well, but I would rather create with a 50 lakh and a good, well diversified portfolio and take it in my hands, right? I'm not a big fan of PMS for a reason, that is taxation. And then 50 lakhs depending on one fund manager out of a, I mean, if you have a 10 crore portfolio, yes, you can. But if you have only 1 crore portfolio or 1.5 crore portfolio, giving one guy 50 lakh rupees is 33% of your earnings. I would not do it. Sorry, savings. I would not do it. So 10, 15 crores, yes, you can go ahead with few PMSs. Other than that, you should avoid. Okay. Can we consider small case for investing? Yes, Veera, you can consider small case for investing. You can consider Mira Money, which is a company that I have found so that I can manage every individual money, like you, like me, like my friend, like like my friend's friend, my neighbor, everybody's money. That's the reason why I've created Mira Money, because there we use our strategies, our allocation strategies, our framework to invest your money and manage your money closely. Yes, we use in our platform, we only invest in index funds, and that way, even though there's an advisor of my experience there, your cost is 0.6% in a year. What more can you ask for? I don't think there's any other platform cheaper than my platform, where you get a good qualified advisor, plus your portfolio is closely monitored. Go check out and download my app, Mira Money. You should, and try and invest 10,000 rupees or a 5,000 rupee SIP. I'm sure you will not be disappointed. Last year, my return was 32%. I'm not saying I'll produce the same next year also, but we are going to help you manage your money better. Go ahead. You can also invest via small case. I have no concerns there. ETF versus stocks versus mutual funds. Bagnesh, big fan of mutual funds. In fact, even in mutual funds, a big fan of index funds, primarily because 93% of large cap mutual fund managers are not even able to beat the index. Why worry? Invest in index. Invest with Mira Money, because we generate 2 to 3% over the index. Simple as that. So ETF is a good option. Stocks, until unless you have the right set of mind frame to do it, yes. But mutual fund is a great option, and especially index funds plus Mira Money. Of course, I want everyone's money to come to Mira Money. Pranay, what's your sector strategy? So if you ask me, 25% in auto, 30% in bank, and I mean roughly about 25% in pharma. These are the three major themes that we are playing at this point in time. So majorly banks, and little bit on, not little bit, decently on pharma and auto. These are the three strategies that we are playing, right? Let me see the next set of questions, guys. Please keep asking me questions. I'm really enjoying today's session, primarily because there are a lot of good questions coming my way. Okay, let me see. How about AIF and PMS to HNI, UHNI, NRI clients? Yes, you can. I mean, yeah. See, the thing is, we shouldn't worry too much about which product that we are going to go for, whether it is AIF or PMS or stocks or mutual funds or index funds. At the end of the day, your question is, am I doing the right thing so that my post-tax returns are good enough to beat the index? Whether I use it via stocks, whether I use it via AIF, whether I should use it via mutual fund, whether I use it via index fund, should not matter. This is out of my 20 years of experience, I'm telling you. The simpler the things are, the better the returns are. The more complicated you add unlisted, you add pre-IPO stocks, you add some crazy macro cap stocks and stuff like that. It doesn't really work as smoothly as you would think. So I would stick to simple ones. But yes, as an investment manager, we have every asset. In fact, we can invest in global assets also. I can help NRIs to build global portfolios, non-India portfolios also. I have all those options. But in general, I'm saying for India, stick to simple investments because that works beautifully. One of the persons has asked me, investing in equity markets, mutual fund depends on. Okay, I've already answered that question. I hope I answered that question, Basavaraj. So, what would be your allocation strategy in the current situation of large cap, small cap? What is the ratio? Large cap, small cap, mid cap. My ratio is 90% large cap, 10% small cap. So Gajanan Perivar, at times we see some shares are operator driven. What's your view on this? Yes, there are a lot of these SME IPOs that have come. I think there's a bit of liquidity driven rally, liquidity sucked in, and so that you can make more money if you invest in all this stuff. It is good. I mean, either you can go to Goa to play in a casino or to Sikkim, or you can use these for your adrenaline rush. I would not recommend this to be a part of your portfolio. See, we all like playing and being pompous about our returns, right? If you want to do that, yes, there are a lot of these IPOs, SME IPOs. If you're operator driven stocks, if you want to invest in, you can. But these are not called, sorry, not invest in. You want to gamble in, yes, but please don't put significant portion of your money in this because you are bound to lose in it, right? Yes, Pranay, I'll share my returns. Let me see. Okay, I have this slide. Pranay has asked me for my returns, so I'm going to share my portfolio. I mean, my companies that we have generated for our set of clients. Just tell me if you can see it. So some of it is back tested, some of it is real. We have been using a strategy called risk adjusted portfolio with integrated diversification. It is called rapid. Okay. Now on rapid means wherever we see opportunities, we want to reduce risk, and wherever we see bigger opportunities, we want to increase our risk. Right. So if you see here, for the last 2 years, Nifty 200, which is top 100 companies in India and top 101 to 200 companies in India. The return has been about 14.4. A peer mutual funds category average is 13.4. The top 10 peers is 15.7%, and we are at about 18.4%. Last 1 year has been phenomenal. If you again see, we gave 32.7% return last year as against top 10 peers. We beat the top 10 peers hands down by 3%. Last 3 months have been okay-ish. We are at about 11% below the benchmark, but it's okay. We will see some below benchmark returns, but in general, we will always see the blue bar standing tall against Nifty 200, PM mutual funds, and top 10 peers, right? So last 1 year has been 33%. Last 6 months has been about 21% or so. Okay. Let me answer a few more questions. What's your thoughts on industrial stocks? Good sector, good companies. Little capex. If you see capex in those industrial companies, just go big on them. I think private sector capex has to come in, and if it is industry, if they're setting up industry over industry, I think it's a good time to invest into them. Anupam, should we continue to invest through real estate, reality focused mutual fund? View on reality market considering how it has performed in last 1 year. I think, Anupam, it is one of the good sectors and looks like it is. I mean, not looks like the correction. The uptick was always due, and post COVID, it has done the right thing. Just keep an eye on sales, keep an eye on earnings. I think there is 2 to 3 years of good real estate stock rally that I expect personally. But unfortunately, there are not enough sector funds that invest in real estate. There are not many options that I personally have, so I couldn't participate in majority of them via funds. Yes, via stocks you should. There are decent, clean companies. They are monopolizing the market, so it is good to invest in real estate at this point in time. I would go big on real estate if I have an index fund which invests only in real estate stocks, right? Pankaj, okay. Could you provide a couple of not so successful investment bets you made and what was the learning? Pankaj, I'll tell you my story about gold. Okay, I did decently well. I mean, I always believe that gold is an asset that is tactical in nature and not strategic. You cannot invest in gold and hold it forever, right? That's my view. I made a lot of money between 2019 till 2021, if I remember right. A super set of money on gold. But come 2021 end, when I invested in gold, it never went up in spite of printing, in spite of volatility increasing, in spite of global war. Nothing really moved gold. I didn't do well at all on gold. And at the end of the day, I had to go sell gold at about 5 to 7% loss, right? I thought I also invested into a fund that invested in gold mining companies. No, it didn't move at all. Thinking that, okay, the gold prices going up will also lead to revenue top line and going up and all this stuff. Nothing happened. So gold has been one of my poor story or failure story in the last 3 4 years or so. I have many. I can keep talking about them, but the recent one has definitely been gold, and I think yeah, that is the one that I can immediately remember. But this is a great question, and no one has asked me this question, Pankaj. Thank you for asking this. Okay. Sorry, I'm seeing few more questions. What should I consider, Nifty 50 or next 50 mutual funds? I think you can consider both, Purushottam. You can look at Nifty 50 and Nifty next 50. Mix it up. Put 80% of your money in Nifty 50, 20% in next 50. It should be good. It should be good enough. Okay, Chintan is joined from Gujarat. Wonderful. Mutual fund or direct investment in stocks? Any day, Sanjay. Mutual funds is a big. I'm a big fan of mutual funds. Hari, I have already answered that question about IT earnings. I think IT earnings may surprise us on the positive side. Hi, Jigar. How are you? Is it possible to share? I've shared that return. Any further questions? I think I've answered. Any sectors to focus on short term? Go big on banks. Try and avoid companies which are showing earnings growth. Sorry, which are showing loan growth because of personal loan. But if there is proper corporate-driven, loan advances, go big on on those banks. Veera, I've already answered that question. Let me see if there are any further questions. Okay. Is Indian market not, yeah. Piyush, Indian market in general is not very broadly overpriced. Yes, subsectors are overpriced. I think I think small cap definitely is overvalued. Couple of sectors, if you could ask me, I will tell you whether they are a little overvalued or undervalued. Anything that has run in the last 2 years is generally in the overvalued sector. That has run up significantly is in the overbought or overvalued zone or so. No, Pankaj, we don't do portfolio simulations and how to compare that in real world. In the sense, I didn't understand the question, but we don't do simulations, that is for sure. Salim, reels are not the best place. REITs are not the best place, in my opinion, for young investors. It is good for people who are a little old and are looking at regular income and all this stuff. But REITs are decent alternate assets, but may not be or should not constitute more than 5 to 10% of your overall portfolio. More than 5% itself is a big investment, in my opinion. Can we consider multi-allocation, asset allocation as of now? There may be volatility in the market as market. No, Mohit, no. I think you should not consider more. I mean, by the looks of it, you're young. This is the time for you to take risks. This is the time for you to, participate in every single market rally. So don't worry about safety as an asset. Go big. Don't be aggressive blindly, but be aggressively correctly. So you should be an aggressive investor, not go and put your head in gold or debt because you look young. You may be old, but you look young on the. I'm seeing your image, so don't look at multi-asset. Equity is what you should look for. Okay. I would take maybe. Okay, I have 10 minutes, so Piyush, I have answered. Any further questions? Sangram, yes, bank. I mean, I've always believed that anything that has got too much of government hanging, overhang, or takeover and all this stuff, I'm not a big fan of those kind of banks. So, yes, bank, no, I would not invest in yes, bank. Yes, they are turning around. For all you know, they may turn out to be a good bank. Again, I don't do stock analysis, but I'm still not comfortable investing or thinking about investing in yes, bank. Abhinav Shankar, outside of India and Nifty, which indexes of our country is expected to give high returns? Which is a brilliant question, Abhinav. I think most of the Asian markets look good. China may surprise you because it's already corrected significantly. So maybe China, you can actually look at it if it corrects even further. Okay. But few Asian companies or countries definitely look good. How much percentage of funds we should be ready if there is a fall? I think you should keep about 15%, Hari. 15% of your money by May end of before the election results. 10-15% you can knock off, hold on to it. I'll talk about the strategy in detail at some point in time, but broadly 10 to 15% is good enough. So what I was saying is, I was also saying in the beginning that I want to incentivize people who come, who take their time out and ask me these wonderful questions, right? So as a part of incentivizing you, right? What I want to do is, if you go to Mira Money, download the app. It's available both on App Store and also on Android. Go download the app, and there is a section where you can post questions. There is a section where you can ask me product specific questions, or you can actually contact me via the app, right? So if you want, I would be very happy to individually answer or spend time with you to build a portfolio for you. That's an incentive that I will give you this time around. Next time I have something bigger coming in, but this time around I think, if you download the app, there are ways in which you can contact us. There's a WhatsApp number. There are a few other places in which you can contact us. I would personally try and spend some time on building your portfolio, building direction to your portfolio, and answering these questions or few other specific questions also. So this is only for those people who download the app and ask me those questions, right? Okay. I think we have few more some more time. So if you have any questions, please quickly ask me. And then, is there any scam going on the market, Mahesh? Okay. Like, there are many Telegram based tips and suggestions. Take this sale here, their stop loss, intraday, and mostly details investors are getting lost. I mean, losses in lakhs. Of course, traders don't make money at all, Mahesh. Tell me one trader who has consistently made money, or not one. You may have one trader here and there, but tell me one trader who has made consistently good set of money, uh, and has quit everything in his life and lives only on trading. There are very, very few people. In fact, there's a global data which says about less than 1% of the people make money in trading. So there's not a scam. It's purely playing on your greed and my greed. Everyone wants to make super returns. Everyone wants to grow rich. So what these guys, Telegram based guys or influencers, do is they will keep talking, giving yarn and attract you. Create a channel. There they will give you tips for a huge cost. They will say, this program is at 90,000, but for you, I'll give it at 10,000 per month. We all will fall for it. Nobody has an head or tail or a clue about where the direction of the market will be in the medium term, in the short term. Nobody has the direction. Okay. So eventually you are going to make losses. I can give it to you in writing. There is no way that a trader will make money regularly, consistently in the longer run. Yes, you may be lucky. Last year you could have said, "Oh God, what Anand, you gave 32%. I made 50% in one stock." Yeah, of course it's possible, but I'm talking about long term here. Try and beat me in the longer run. Try being a trader and beat me in the longer term. I can bet you cannot. Sorry if I'm sounding a little aggressive, but trading is not something which we should focus on. I'm so sorry, but I don't think you should focus too much on trading. It's a loss making proposition. What's your take on crypto investment, Piyush? Thanks for asking me this. It's a good topic. I think this is my CIO's view, right? And I really get inspired when he talks about crypto. I think crypto is bound to do well because it had its own set of initial hiccups. It went up, people looked at it as a gamble, then it came down, people lost their shirt, again it went up, people again took it as gamble, but now it is a lot more stabler. Now there is more purpose driven. It is more there are more objectives in crypto, right? So if you really want to invest in crypto today, like earlier I used to call it a scam asset, or not a scam asset, sorry, volatile asset, a betting asset, an aggressive asset. Today I do have a bit more respect for crypto. I've held investments in my crypto earlier also. Those was more like betting money, but today I think it can be a small portion, very very small portion of your portfolio can be invested in crypto, but very very small portion, and cryptos that are known in the market. Don't bet yet on unknown cryptos. Maybe bitcoins you can invest a bit, very very small, and if you get more and more confidence, go big on those cryptos. When I mean big, maybe at the max 5% or so. I have invested some money way back at a decent levels. I will continue to hold them. I'm not saying it is the asset to invest in, but you may get surprised. A lot of transaction can happen in crypto, and at that point in time, crypto prices can shoot up. So yes, you can make money by investing in crypto in the medium term or so. That's a good question, Piyush. I mean, I really like the fact that you asked me this question. Any Okay, thank you, Pradeepa. So we will put out. So we will. Okay, Chintan. Thank you, Pradeepa, for appreciation. It's always good to get appreciated by, uh, you know, by people who are friends, who really come and spend their time. Chintan, so well, so we will put out money from the market or add new amount in the time of correction. But what if there's no correction, Chintan? So don't wait for corrections to happen. I've already said that even if you invest at these levels in Nifty, there is a possibility that it can go to 25,000 and that will itself give you 15% return. But yes, I'm going to move away from small cap, but get that money into Nifty 50. I am yet not ready to move all money away from my equity portfolio. Maybe I will do it around May if there is a good rally, expecting the current government to come in. So there are a lot of ifs at that point in time. At this point in time, not 1 rupee I'm moving away from equity markets. Continue to invest, stay invested, add more money. So I have 2 more minutes, guys. If there are any questions, please pour in quickly. Also have a look at my app. As I said, you will be able to connect with us personally via the app. There are multiple ways, using the WhatsApp channel and other ways to contact us. We'll be very happy to help you build your portfolio one on one. I'll try and spend as much time as possible. Chaitanya, which is better, Nifty or Sensex? Both are equal. Sensex has got top 30 companies, Nifty has got top 50 companies. In times of great volatility, Nifty will sound better. In times of great returns, Sensex tends to be better, but it also depends on portfolio composition. So there is no clear answer on Nifty versus Sensex, but I've always seen they go neck to neck. Not too much of a difference, but because Nifty is larger, liquidity is better. Sensex is also pretty good. So liquidity may not really be the reason, but Nifty being the larger exchange index, I would stick to Nifty, Chaitanya. Okay, I'll take the last question. And if you have any further question, of course, also give me ideas, guys. What should I be talking about in my next session? I want to know what are those questions that are on your mind so that I can build my next session around it. So, any last question? And how did you like the session? A thumbs up, a thumbs down, a love symbol, whatever. Please do share it with me. It'll be good to see your reactions. Oh, let me see. Okay, somebody has asked me a question. A last question. Okay, 2 questions. Wonderful. I'll answer those 2 questions, Purushottam and Abhinav. Commodities and currency, which way are they headed? INR should come up. I think Indian markets Indian economy is stronger. Interest rates are a lot under control. Inflation is decent. So I would look at uh, INR to get stronger. Commodities, crude, which is a great thing, which people have absolutely ignored. Today we don't worry too much about crude. Is It has come down 40% from the top. It is beautiful news for crude importers. Gold may go up a little here and there. Crude oil may again be very, very range bound. I don't see too much of a movement in these two major currencies, and same applies for silver. So commodity doesn't look like it will have a great year at this point in time, at least. Currency INR should come down, is what my belief is. A bigger believer in India as a story, so maybe I'm a little biased there. UTI Nifty 50, HDFC Nifty 50, ICICI Nifty 50, everything is the same. You can invest in any of these, Purushottam. I invest in Motilal Nifty 50, I invest in Nippon Nifty 50 in my portfolios. When you download the app, you will see these are the funds that we have had. But because it's an index fund, any fund is good enough. You can, if you know what to pick, I think you can pick UTI to be on the, or you can, yeah, go ahead and pick HDFC. It looks a little better, but yeah, it's all the same at the end of the day. It's a pure index fund, right? So I think with this, I'll close the session. I will join back next week again. So please feel through and give me suggestions on what should I be talking about next time, right? Sangram, okay, what is your thoughts on Yes Bank? I already said I don't do stock analysis. Anything that has got a lot of overhang on users, public, and scams and all this stuff, I try and avoid. So I'm not a big fan of Yes Bank. I would rather keep my money with ICICI than with Yes Bank. I mean, in terms of investments. How to move from small cap to, okay, Hari, I will build a story around how to build two stories. I will build is what is my election strategy, which I'll do a little later. What is my strategy on moving from small to large caps? Thank you so much, all of you. It was wonderful seeing you, and I hope I answered all of your questions. If there's anything pending, I will try and answer that also. Thank you for joining in, taking the time out on a Thursday. I will join next week again very soon. Thank you so much. Good night.